Hey, this is Rob Swanson with the Real Estate Mogul Show. Let's get into it. What's up, everybody? Rob Swanson back here with another Real Estate Mogul Show. Hey, we are going to sit in the studio today and we are going to riff real estate investing and give you some valuable nuggets and takeaways that you can go and put to work in your business starting today. Things are going to start with mindset, action, and the to-do items that you can go do to get the results you want. So, with all that being said, hey, would you do us a favor? If you like what you get out of this show, would you share it on your social media apps? Would you like us on YouTube? Would you subscribe? And just let others know about it. We're going to come back every single week and give you more conversation to listen in on. So what we want to do with these shows is make these the hallway conversations that happen around here that actually drive our team and the coaches through the Real Estate Mogul Academy to help not only themselves, but our students get the results they want in their business and life. And so that's where the conversation today is going to go. And, I find that, so we did a roundtable conversation yesterday. So yesterday was our December Real Estate Mogul Roundtable Academy conversation. And it was a fun conversation because we had somebody that was literally sitting in the parking lot at the attorney's office waiting to walk in and collect a $25,000 payday. And this was a wholesale deal that she had produced following the process. And I'm telling you, every speed bump, every hurdle, everything that could have derailed and made this deal not close showed up. Mm-hmm. And yet she pushed through, she persevered, and she got it across the finish line. And I thought that was pretty cool. And she walked away from this deal with, a $25,000 payday. But more importantly, she walked away with the confidence that it works. And mindset-wise, where she's at now is this transition and beginning the process of moving from, okay, it works. I know I can go generate cash. Now, what do I have to do? I've got to transition this cash and this understanding of how to do it into cash flow creation. And so I think, that's a lot of the, water cooler conversation that we've had lately is cash flow creation, because it tends to be the goal of most of the people inside of our Mogul Academy, right? We obviously have the freedom formula and the 5 phases to building wealth inside of the freedom formula. And phase 1 and 2 is what we call the flywheel, and that is a cash generation phase and a cash flow creation phase. So those two flywheel back and forth on each other. And that moves people into phases 3, 4, and 5. Most of the time, most of the conversation is spent on phases 1 and 2 because that is the active process of building a portfolio, achieving and creating financial freedom, and getting to that destination. And so what I think we should do is talk about today, guys, if you were starting from scratch, zero, you got nothing, you've got the knowledge that you want to use real estate investing to go create financial freedom, what would be your process? What would we tell people to do to create financial freedom through real estate investing if they're starting from scratch? What I want us to do is I want us to break that down and give people kind of a step-by-step plan and a guide that they could go follow. So let me just do this. I posted the question. Let me drop it to you guys. Where do we start?
I think because we've talked about this before, and you brought up Jason before about, if you have a high-paying, high-earning, cash income job, you can step into the freedom formula in with a different lens, because no one's going to require you to sit there and grind and wholesale the whole time. So I think if it were me, I would have to look to say, is step number 1, cash generation, solved for yet? And is there some sort of high income cash generation plan that I already have in place? If the answer is no, I would do it through real estate investing, through wholesaling. Based off of my journey now, I know that that's the route that I would take to get cash fast. And that would be through building skill, building relationships, like I've mentioned on other podcasts, to generate that cash via wholesaling, and then move into phase 2 while you're actively doing that. As far as generating leads, we've talked about it before, but I would do the same thing. I would use FreedomSoft to build lists, and I would send direct mail. From there, I would have consistent offering conversations to motivated sellers to get things under contract while I was building relationships in, those markets that I'm in to better dispo deals faster throughout the year. And I think one thing that's helped me out a lot is because I focused on that relationship building and that network, it helps you when you get into phase 2, because you already know a good set of people inside of that market that can help you, whether it's a title company, property management, just other investors that can give you insight into, where's a good rental neighborhood, where's not. So yeah, I think that would be the route that I would be looking to take for sure.
So step 1 would be to sort of self-assess where you're at, right? Are you starting with no money, or are you starting with a high income already, or are you starting somewhere in the middle? So what I'm hearing you say, and I think this is correct, is first step is to self-assess and just figure out where you're at from a financial standpoint. Now, because this goes back to what I've advised students to do for years, even down to my own kids, right? I tell my own kids, the first thing you want to do is increase your active income. Get yourself in a position where you have a high earned income coming in, because investing in real estate takes money. It doesn't take your money, but it takes money. And when you have a little bit of money, there's cushion there to help you navigate through any of the hurdles and challenges. So I always tell people to figure out your active income and get a high active income first, right? If somebody's starting with a $40,000, $45,000, $50,000 a year salary, the first thing I want you to ask is, how do I bump that? How do I get that to 6 figures? How do I make more money? That could be you keep your job, and on a part-time basis, you add something else on top of it that accelerates you to a higher earned income, something that puts cash in the bank account. So step 1, self-assess. Okay, now we've self-assessed. And let's say that we've self-assessed and we've determined we need to make more money. We're not making quite as much. We don't have as high of earned active income yet as we would like to do. How are we going to solve that problem? What are we going to do to make more money?
So first off, you're starting with the right question. Self-assess. To go the make money route. So I loved a challenge that we did. And we did multiple challenges looking back over this year, but we did one on markets. And Rob, you have a really interesting background when it comes to markets. If I can, I'll tell your history in the elevator pitch. But you got coached originally, almost 25 years ago?
Yep.
Started doing what you were told, started closing deals. The way I remember the story, tell me if I'm wrong, but about a year into it, that group reaches out to you and says, "Hey, Rob, you're crushing this. Would you consider becoming a coach with us?" And then that looked like for the next, and I think from what I recall, you did this for a couple years, but it was, 1 or 2 weekends a month. They would drop you into a different market across the country. And you got a really unique perspective on, I believe you lived in Denver at the time. And what most folks do is they say, well, I live here. I'm just going to try and do real estate here.
Yep.
And you were doing real estate primarily in Denver. But then you got this really unique experience where you were dropped into random cities across the country, teaching the similar, if not the same, methods. And I believe what you noticed was there was a different speed to lead, speed to success, however you want to describe that. And so I think it took your engineer brain and led you down the path of what's going on here. Is it the person?
Yep.
And that question led you to maybe it's the market. And I know that's where you landed because you've been teaching this for a couple decades now. What's really interesting is, I'll be honest, I don't know, and you've been teaching real estate for a long time. And I was brought into a world of live where you want, buy and sell where it makes sense, but that's a unique message. What is most common, and this is the coaching system that you experienced, was, oh, Rob, you live in Denver? Go do this in Denver. So when you ask me this question, I see, okay, I want to invest in real estate. The first question that I want to answer is where. Now, I only know to ask that question because of the experiences I've had over the last 15 years. And most people default to, I live here, I'm going to invest here. And for some people, they just happen to live in a market where we would teach that it's easier to go find a distressed person and a distressed property as opposed to somebody else. I was talking with a gal yesterday, and she lives in San Francisco. And I looked it up quick. The average single-family home price right now in San Francisco is $1.25 million. Average. That's a very different market than Birmingham, Alabama, as an example. Average single-family home in Birmingham is $114,000. And so, to speak into your question a little bit, had I not worked here, I don't think I would be asking the where question. But I've been around for a while. And so I'm just saying, based on my perspective, you've made the decision, says, okay, I got to go generate some cash. My opinion, the next question is where. Because markets are not the same. They're not even close to the same.
Yeah.
And we actually saw that on our call yesterday as well. As soon as you were just on your calculator yesterday.
Right.
As soon as you show a little bit of calculator math and compare just two cities, right? And even in your scenario, you were bringing in a private lender, and that's what fit the math.
Yep.
As soon as the rent changes or the price gets too high or something just slightly goes off, it throws that market out for the quote-unquote buy box, which is what he's talking about. So I think that's why it's really, really important to go into it knowing, I'm going to invest in real estate. I need to generate more cash, but I also need to understand where that needs to happen because it needs to be in the right place so that it can happen.
Right.
Yeah.
Yeah. So, Mike, what you're talking about is an easy profit city. And so I figured this out a decade and a half ago. And I figured it out 20 years ago because I observed it. And I started to build an approach to pick markets and pick cities based on the speed to getting paid or the cash flow, the speed to financial freedom, right? And so we call those around here an easy profit city. And so you disconnect where you live from where you invest. And if you can do that, and if you can understand that is beneficial, then the whole world, the whole country becomes your oyster. And you get to go and invest where you'll make the most money the fastest or create the best cash flow the fastest. Now, if we back up, that is so much easier today to do, to pick that market and then to actually execute that strategy remotely than it was 10, 15, 20 years ago. It used to be actually pretty hard. And today it's pretty simple. And but it's a mindset shift for most people. So, okay, back to our steps. We've self-assessed. We've said first we need to increase our active income. We need to make more money. That's kind of where we've landed on being. And then, Mike, you brought up step 2, pick the market. Where can I, number 1, increase my active income the fastest? Because let's take the 2 examples you just talked about. Let's take the Birmingham, Alabama, and the San Francisco. Both markets make money. You can make money as a real estate investor in both. You're going to make bigger profits in San Francisco on a single deal than you will in Birmingham, Alabama. You'll make smaller profits in Birmingham, Alabama. You'll do fewer deals in San Francisco, and they will be more spread apart. So you'll do fewer. It'll take longer to get them. You'll spend more money to get them. But when they hit, you'll make $100,000, $200,000, $300,000. You'll make more money. But you might spend $30,000, $40,000, $50,000 in marketing without seeing any return before you make your first 150, right? So you're going to spend a lot more to make a lot more on a single transaction.
I feel like you have to, when I was hearing the numbers that Mike was saying, it's almost like you have to 10x, like 114,000 in Birmingham, 1.4 million in San Francisco. Might take you, might make 15 grand in Birmingham, might make 150 grand in San Francisco, but it's going to take you 10 times as long potentially as well.
Yeah.
So
yeah, I think that's a reasonable way to think about it, right? There's a multiple of 10 separation between what you do. So you might to make money in Birmingham, you might spend $5,000 in marketing, right? But in San Francisco, you're going to spend $50,000 in marketing, and but in Birmingham, that $5,000 is going to make you 15 grand, whereas in San Francisco, it's going to make you 150 grand. The problem is you can do that on month one in Birmingham. You're going to wait for month 10 in San Francisco. And so I think that's a good observation, is that there's a multiple difference of 10 that you can kind of think about between an easy profit city and not. And there's varying degrees in the middle, right? We're talking about kind of two extremes, Birmingham to San Francisco. And then there's a little bit of gray that moves around in the middle. So I wanted to say a couple things. So the easy profit city is a key component to this. Mike, you mentioned one of the things that I was living in Denver back when I got into this business. And here's the thing that I want people to understand. You can make money in any market at any time if you apply the right strategy. Here's what most people do. What most people do is they pick the guru strategy of the day. They apply the guru strategy of the day to their local market, wherever they live. And if that local market, wherever they live, doesn't match or mesh with that strategy, they beat their head against the wall and they don't get the results and they don't have the success. Because what they're doing is they're taking any strategy and applying it to their geography. What you want to do is pick the geography first and then ask yourself what strategy makes sense. So taking this back to my story, when I got into this business in the late 90s, early 2000s, Denver had been going through a massive construction boom. I-25, T-Rex rebuild. They moved DIA in the mid-90s from where it was at Stapleton out to where it is off Pena Boulevard. I mean, billions of dollars in construction infrastructure investment in Denver back in those days. So there was a massive boom, and it was like appreciation in Denver was, 10, 12, 14, 15, 20% a year for multiple years. And that's when I got into the business. You could not drive around Denver. There was 0 vacant houses. There were 0 boarded up houses. There was no distressed observable inventory anywhere. So you had to use marketing to generate leads because you couldn't go drive a neighborhood and drive for dollars. You just didn't see it. The distress was not observable. So you had to use marketing and list building and strategies to get people to raise their hand because they knew that there was a distress there, but we couldn't see it without the marketing and them raising their hand and coming to us. And so what I figured out, though, was that the strategies that I was applying at that time were different than the strategies that were working in other markets. To Mike's point, I was traveling around the country every other week and dropping into a city. So one week I would drop into, I don't know, Columbus, Ohio. And then the next week I would drop into San Diego, California. And then I would drop into Tulsa, Oklahoma. And then I would drop into Dallas, Texas. And then Minneapolis, Minnesota. And then Miami, Florida. And I would go from these different extremes of different types of cities. Today, I call those cities either boom bust markets or price stable markets. So this is based on historical appreciation and how this local city responds historically through booms and busts of a market. Does it run up and appreciate and then crash, and then run up and appreciate and crash over the 17-year average cycle? Or is it relatively stable where cash flows exceed cash flows exceed debt service? So you can create a positive rental cash flow over time, and that market doesn't boom and bust. It goes up a little bit and ticks down a little bit in the downturn, and then it goes up a little bit and it ticks down in the downturn. So depending on the strategy you're trying to apply, right? Whether that's creative finance, whether that's just cash at a discount, whether you're trying to wholesale for cash creation, or you're trying to build a rental portfolio, picking the market and then understanding the skills and the strategies that you need to have in your quiver, the arrows in your quiver, matters, right? You can apply the wrong strategy to the wrong market at the wrong time and conclude that it doesn't work.
That's exactly what people conclude.
That's what they conclude.
Oh, this doesn't work.
Exactly.
This teaching didn't work.
Yep.
But that's right. That's all paths seem to lead to that road when it goes sideways.
Yeah, and so there's three things that we always tell people you have to connect. You have to connect the strategy to the geography to the timing. If you connect those three things, the strategy you're using, the way you're going to buy and sell real estate, the way you're going to make money, the geography, the location you're doing it in, is it an easy profit city, and is it in a boom bust or price stable market? And then the timing, at what phase of the overall macro cycle are we experiencing? And then inside of that market, timing inside of the micro market, because different neighborhoods sort of move differently. So I love this conversation because this is the thing that people miss, right? And so if you can connect that triangle, those three things, and then you can say, okay, I understand that it comes down to strategy, geography, and timing. Then you can do what? Then you can step in and you can say, okay, well, step one, let's pick the market. Let's make sure that the market matches the strategy. Let's make sure that the timing is correct. And then you begin to execute. And if you execute with the right strategy, in the right geography, at the right time, you will produce fast results. And I'm saying fast results.
Fast and consistent. I've seen investors get lucky when they don't have the three things aligned.
Yep.
And that can happen.
Yep.
Because they're just like ignorance on fire. And every once in a while, that method will come across a deal, but then there's nothing sustainable about it.
Yep.
And so it's kind of a false positive that said, oh my gosh, this worked. And then frustration builds. What the heck? I'm doing the same thing I just did. Why is this not working?
Yep.
And then sometimes that level of frustration can be even higher because they've proved, wait a minute, I did this one time. I should be able to repeat it. And then they can't see or don't understand the walls that they're now bumping into.
Yep.
Which becomes, like I said, incredibly frustrating scenario when those three things aren't aligned.
Yeah. So if I take it back to those three things, right? The strategy, when I got into the business 20 years ago and I was in Denver, and Denver was appreciating rapidly, there was no distressed inventory observable. The in-migration of population growth was great. Prices were going up, rents were going up. Like 20 years ago, almost like today, right? Almost like what it's been over the last couple of years. 20 years ago, all of that same thing was happening, and yet I was buying rentals and I was closing real estate, but I was predominantly using creative finance. Again, like today. And so the challenge that I had with that was, I bought, I was doing sandwich lease options, and I was buying subject to, and I was doing, owner financing, you name it. I did every kind of deal under the sun. And I did a lot of it. And there was good about it, and there was challenges with it. And here's what the good was. I applied a strategy that solved a problem, because the problem was generally not distress. The problem was generally not a bad market. The problem was the people had a financial challenge. They lost a job, they got divorced, they moved out of state. Something financially happened, and a lot of times it was a double payment problem. They had a house that they had just bought. They had to bid up the house to get it, so they were over leveraged. In a hot market, people tend to be over leveraged until the appreciation continues, and then all of a sudden they create this equity. But when they're buying, they buy and then they get a job transfer less than a year later. There isn't time to create the margin for them to sell and get out without coming out of pocket because they owe too much. And so an all cash at a discount offer didn't work. So what did we have to do? We had to basically take over their payments, take over the cash flow payments, and create arbitrage on the cash flow. And so that's the type of deal that we were doing, and we would structure it depending on their scenario in a variety of different ways. And we were doing a lot of those kind of deals, and they were great. The challenge is, as soon as somebody moves and then is ready to buy another house, they move, they get into their new location, they rent, and then another year later, they're ready to buy. And all of a sudden, they have this, let's say we bought it subject to, or we bought it owner financing with a wrap, and they still have their loan on their old house. And now they're ready to buy the new place, and their debt-to-income ratio doesn't work. Now you have an angry seller who was happy a year and a half ago when you got them out of their situation and you covered their payments. But now a year and a half later, that same thing that made them happy is now preventing them from buying another house, and now they're mad. And now they want you to solve this, pay it off, do something. And so I'm not saying the strategies don't work. I'm saying that when you use strategies that ultimately lead to humans having to remember why that strategy was helpful to them in the past, but they're still tied into the real estate itself in some way long term, people have short-term memories, and they forget that you helped them back then, and now they're mad. And that creates stress, challenge, lawyers. It becomes a big pain in the butt. And so if I flip that was the strategy we were using in the geography of an appreciating boom-bust, high-priced Denver market at the time in history, at that timing, in order to do deals. What I found is that if I would just go remote, I could go into a market where I could create the same cash or cash flow strategy and eliminate the seller. Like the seller got their money up front, or the seller didn't owe anything on the property, so their owner financing was easier to deal with, short of leaving underlying financing in place. And so jumping geography into a price stable market allowed me to sort of stop dealing with all of this stuff and actually do consistent deals, which started to inform my buy box, and it started to inform what I go out and I go after. And generally I buy cracker box, square, rectangular, single family, single story, brick and stick houses in C plus to B minus neighborhoods, and that cash flow positively. And generally you either paying cash or using private money. And I want them to cash flow using private money, even if I'm going to pay cash. I always analyze the deal. This is me personally. And a lot of times people tell me I'm too conservative on a lot of things that I do, but after 20 some years, I'm still in the business. And I've watched a lot of people come and go. And so I like to purchase. I like to be a value discount investor. I like to buy at a discount or with great terms, without underlying debt from the seller. I like the cash flow to be net positive to my minimum after taxes, insurance, maintenance, management, and vacancy if I were to use private money. If that deal works, I know I can anytime bring in a private lender and pay off any underlying debt or pay off or just refinance and bring my own capital back out of the deal and cash flow positively. That's what I'm always looking for. So step one is evaluate where you're at. Step one is evaluate where you're at. Step two is pick your geography. What's step three? How are we going to get people doing this?
I'm going to chime in here because you said buy box and it's been a topic. It's always a topic, but it's come up a lot lately. So, Rob, one of the dangers in our scenario, we take somebody that wants to go generate cash, and we've talked through step 1 and 2, and then the mindset that I run across is whatever deal comes my way, I'm just going to try and make it work because that's where I'm at and I need cash.
Right.
As opposed to backing the truck up 10 feet and saying, this is the specific deal that I'm going after. As I start to talk to people, run marketing, whatever, it either fits the deal that I'm looking for or it doesn't. And if you can generate that and stick to it, number one, it allows you what to say yes to, but in my opinion, more importantly, it tells you what to say no to.
Right.
And the danger in I just have to go generate cash is you say, I'm going to go flip single family homes, and maybe you drop some marketing or you're talking to somebody and they say, oh, my brother-in-law's got a farm for sale 100 miles from here. I think you can make really good money on it. Oh, yeah, that sounds interesting. And now you're so far off track and losing sight of where you're at, and then you get frustrated and say, oh, this doesn't work. Well, no, it works. You just didn't know what you were trying to accomplish, and because of that, you didn't know what to say yes to, but more importantly, what to say no to.
Yeah.
And so now you're scattered trying to figure out, how do I sell a farm? So-and-so has a hair salon, and then I've got one single-family house over here. What am I going to do with all this?
Yeah.
And you are just in weeds so thick you can't see where you're going. And so to sit down for a second and identify a little bit of clarity, and here's what's so interesting about real estate. So you said a while ago that deals are being done in every city across the country every day. That's true. Somebody set out and said, I'm going to go buy multi-million-dollar Airbnbs.
Yep.
And when you think about location, you're not going to North County, St. Louis. There's no multi-million-dollar houses. So to Rob's point, your strategy needs to match the geography.
Yep.
You can probably go to Destin, Florida, but you're not going to North County, St. Louis.
Right.
I'll tell you that, right? So there has to be some congruity and some congruency. Thank you. Not even Monday. Man, I got all sorts of brain twisted there. Congruency in what you're doing. And then there has to be congruency, or, we call it the buy box, but the buy box is clarity.
Yeah.
What do I do? What do I not do? Brain surgeons don't get approached, or if they do, with a heart problem. I don't do hearts. I do brains. Right? They know what to say no to.
Right.
And then investors think, oh, we can just operate with, I'll look at anything. I hear this all the time.
Yep.
Asking the most common answer I get, what kind of deals do you do? And I'm looking for the buy box.
Mm-hmm.
I'll look at anything.
Yep.
And I know exactly, I don't say it to the person, but I know exactly in my mind you're making far less money than you should be because
I usually say
you're scattered.
person.
You're scattered chasing random things that everything new has a learning curve.
Yep.
Everything. And so This is one of the, in my opinion, for the investor that's built a little momentum, saying no is the hardest thing in their business, because opportunity will start to find you the more active you get.
Yep.
And you have to have a filter that says, I'm sorry. Maybe you have a network that says, hey, this isn't right. This isn't what I do, but let me connect you with so-and-so. The faster you can get that non-conforming deal, non-conforming to you, out of your world, the more focused you can stay. And you can't build systems, leverage. None of that comes into play when you're doing one-offs.
Right.
Yep.
Ever.
Right. Yeah, one of the biggest challenges with residential real estate investing is every deal is different, right? Every deal rehab's different. Every deal is laid out a little bit different. Every house is slightly different. And so the inefficiency of that requires focus, because you can bring some sense of efficiency to the model if you're very clear about the buy box, about what it is you're trying to acquire. And, we talk about this all the time on the podcast. On this show, we always talk about the fact that people got into real estate investing not to hustle and not to just make a lot of money, but to create freedom and to build financial freedom and to build a portfolio that cash flows and works for them, whether they're working or not. And yet, so many people get into this business and start wholesaling or get into fix and flip. And look, I was the same guy. Like, I did this early in my career, right? We had a hustle. We were making good money, but I didn't stop until about 7 years in and say, wait a minute, this is crazy. Like, we're making good money, but we're always working. Like, there's no off the rat race track with what we're doing here. So back to the freedom formula, phase 1 and phase 2. Phase 1 is the rat race, right? Phase 1 is the hustle that gets you the higher earned income and teaches you real estate and teaches you markets and teaches you strategy. But phase 2 is the jump off of the rat race, or it's the ramp off of the rat race, because that's the cash flow creation. And that's where financial freedom is built. And so, I think that it's so important for people to get that. The most successful real estate investors I know have relatively boring businesses. They're pretty boring.
They just copy and paste it.
They just copy and paste. They do the
The
same
P&L's not
thing.
boring,
The P&L's not
but
boring.
the day-to-day,
Right.
agree.
The time freedom you have to take friends and family on vacations and cruises and surfing trips and European vacations, that's not boring.
Yeah, I mean, that's the why, though, right? I mean,
That's the why.
that's the why. And, step one is the cash generation side, but, I've tried to harp on this as much as I can when I can talk about it. It's worthwhile being on that rat race, not just for the cash generation. Obviously, that's important, because when you do have your buy box and you're ready to go, having cash on hand and capital ready to use is there's a freedom aspect of that, because you can move and you can move fast.
Yep.
But the other 50% of the rat race in phase 1 is the learning aspect of it, because it just makes your life easier when you are on that off ramp and when you are moving into the next steps. And what Mike has been mentioning lately is, as you're in that rat race and as you are building those connections, there are going to be opportunities that just start coming your way, even off your marketing path, right?
Yep.
I've been seeing that personally this past couple months, being that I've been involved in St. Louis for so much, and I had been buying. A lot of people know that now, and now you get to a phase where your title company may say, hey, here's a deal. It fell through. Do you have a buyer for this, or are you buying right now?
Yep.
That wasn't happening to me 2 years ago, but it is now.
Yep.
And that's because, you are ingrained in this market and in phase 1 consistently. Even if you're not currently wholesaling, there will be opportunities that are coming your way. And then also, to Mike's point, then that's going to be where you're going to have to look at it in a lens of no or yes. Is this going to make me money? And or is it going to just waste my time and throw me down a path that doesn't make any sense? Yeah.
So if we're taking this back, step 1, self-assess. Where are you at? Step 2, pick your geography, right? Step 2, pick your geography. Step 3, pick your outcome. Like, what are you trying to accomplish? What do you want, right? And it's almost like picking the geography and picking the outcome are synonymous, because oftentimes the geography will serve up a certain type of outcome. And so I would say self-assess, pick your geography, pick your outcome. Are you trying to generate cash, or are you trying to create cash flow? And a lot of times an easy profit city will do both for you at the same time. They're the best markets to wholesale in to generate cash because the deal flow is consistent, and they're also the greatest price to rent ratio where the cash flow is the greatest. And so a lot of times if you pick your geography and your outcome together, you're going to be in an easy profit city and you're going to be right on track. Step 4, what's the next step? So if we've self-assessed, picked our geography, know the target we're shooting for, so we've selected our outcome, we want to create cash flow. We want to ultimate financial freedom. What's the next step?
Build a list.
Yeah, I think if step 1, you realize that you needed to build up some capital, then when you get to step 4, it's time to develop a market strategy, really. That involves building a list, but then you kind of have to ask yourself, who am I marketing to, and what marketing am I using to hit those people to raise their hand? That's usually how I say it on my Zoom calls. It's like, you told me you're looking to do single families in X, or you're looking to do land. My next question to them is always, how are you planning on getting in contact with them? So it's a marketing strategy.
Yeah, I think that's right. I think it's build a list and start your marketing. So because if you go back to the question, and the self-assess question is just to get you to slow down, stop, and think for a moment. Because too many people put the cart before the horse and they start taking action without thinking about the outcome, right? And so the self-assessment forces you to say, okay, what am I trying to accomplish, right? To your point, my conversation with Jason, one of our team members, Jason makes good money. Jason makes plenty of money. Jason doesn't need to go wholesale and increase his active income. He's a high-paid media buyer. He already has a high income because of a skill that he has that is a high-paid, high-margin skill. What Jason needs to do is move straight to phase 2, which is start taking that high income that he has and converting it into cash flow and converting it into acquiring and building his portfolio. And so the self-assessment just says, where are you at? Self-assess. Number 2, pick your geography. Where in the country are you going to do it? Boom bust market, price stable market. Pick an easy profit city. It's your fastest path to cash and cash flow creation. That's what an easy profit city is. Select the outcome you're going for, right? The outcome is, I want to build a portfolio that pays me cash flow. I want to disconnect my time from my result. I want to get paid whether I'm working or not, right? That's select the outcome. Be really clear about that and recognize that the most successful real estate investors that I know, including myself, have relatively boring businesses. We stamp out a model and we repeat it over and over and over and over again. And every time we repeat it, it adds to the P&L. It adds to the cash flow. It adds to the cash that we put in our pocket. Because here's the thing that I want you to understand in selecting the outcome. If you match those 3 things that I talked about, if you match your strategy with your geography, with your timing, and then you layer private money and capital over the top of it, you get to do cash flow creation and cash flow generation at the same time. You get to do both at the same time. Every property you buy accomplishes 2 goals with 1 piece of real estate.
Yep.
And that's huge.
This is why I love the Real Estate Mogul Academies, because this blueprint that we have set up for them. Because, if I ask you, Rob, if I brought you a deal and it wouldn't work for you, you'd be able to wholesale it, right? You
Yep.
could do it right now.
Yep.
If it met, the criteria to know I probably have a buyer for this, it's in a market that I'm familiar with, you could just go do it, right?
Yep.
But you're not actively trying to go do that all the time because you've disconnected your time and you're getting paid whether you're working or not.
That's
But, some people in the academy come along and they say, I want to wholesale, right? But we tend to try to not let them stay in that mindset because
Yep.
I guess, and you've probably seen this more times than I have. I haven't seen it much, but you've probably seen burnout when it comes to wholesaling in general because they didn't have the answer to that next question, which is what you were saying. What is your outcome, right? Is your outcome to try to wholesale as many deals every year for the next 10 years, right?
Yep.
I guess you could do that, but the way that we've set up the academy is that if the inevitable goal is to build financial freedom, grinding every single month for your next deal on the wholesale side of things needs to just be an outlet and a potential option for you with a larger goal in mind.
Yep.
And that's why I love the conversation that we're having and the formula that we've laid out, because it tends to not let people sit in just that mindset all the time, every time.
Yeah. I mean, it was, for you, Henry, it was that model of increase your active income, go make a bunch of money, allowed you without having private money yet to begin building your portfolio.
Mm-hmm.
And so because of the cash generation, you were able to start adding to your cash flow creation, phase 2, even without going out and raising capital to fuel that, because you were able to self-fund.
Mm-hmm. Yeah, I mean, it's funny because if you ask me now, going into 2024, is like, to be honest, I don't want to do as much wholesale work that I did this year.
Yeah.
I want to make just as much money.
Right.
But I don't want to do it the way that I did it in 2023.
Yep.
Because I have tasted what it feels like to get passive income every single month. And I've also learned that there's another way to unlock that and find that same passive income without having to close 2, 3, 4 deals a month consistently to have the ability to get a down payment.
Yeah.
I mean, that's just 1 year in. I'm not saying that's going to be someone else, but for me, I'd rather go do something else with my time.
Yeah. So think about this, and we're going to come back to the steps: self-assess, pick geography, select the outcome, and then marketing. And we're gonna answer the list and the marketing questions here in a minute. So don't let me not come back to that. Okay, we want to come back to this, but I want people to hear this. I want people to think about this. The amount of money that you can make is directly related to the activities that you do. So let me explain this. If you do, so doing is the lowest paid activity. And I don't care if you're a high paid skilled expert. Doing is the least scalable and it's the lowest paid activity. You don't see a billionaire doing, because it takes work, it takes physical, doing is the act of doing something, okay? That's the lowest level of income. The next level of income is managing. So now you go up and the scale of income earned is managing, and it's making money off of the efforts of doing plus the efforts of others doing. So you go from doing to managing to communicating. When you begin to make money by communicating, you exponentially jump up to another level. And then the fourth and the top level of making money is based on thinking and idea creation. So let's take this back to what you were just talking about, Henry. Doing is wholesaling. Managing is starting to build your portfolio and managing the people involved in helping you acquire and build that cash flow while you're creating cash. And managing could be, get a team member to help you do lead generation, or get a lead manager, start to get a team around you to support that growth. So you've got doing, which is the wholesaling hustle. You've got managing, and then you've got to get up to communicating. Communicating is when you start to build private money. You're communicating, and you're attracting people to you that have fuel to pour onto your business. And so the exponential layer that you will step up with from doing to managing to communicating, once you begin communicating, i.e., teaching people about private money, having that conversation, being vocal, having this conversation out there, people will begin to raise their hand and participate with you. And then above that is the thinking level. And it's recognizing where are the bigger opportunities. If I've already mastered communicating and managing and doing, thinking is the next level of upside and opportunity. And so I wanted to throw that in there because so many people get stuck in the doing side, and then they jump to the managing side, and they don't realize, they don't realize that the person that's physically doing something is working way harder than the person that is talking about something, communicating, and the person talking about it is making a lot more money.
Yeah, I think the connection you just made is the gap between people that, and again, if you don't seek that goal of financial freedom, that's fine. But for the people that say that sounds interesting and I want that realization of crossing that line between I'm doing and I make money and I just rinse and repeat that same process for the rest of my life, and never disconnect their time of doing and the money that it earns them, and then actually go and invest that money up to the managing side, up to the communication side. I think that's the major gap where people miss, or in all honesty aren't really taught, and they're not really associated with that mindset of disconnecting their earned or active income with that mindset.
Yeah, and we have a training, a lesson inside of the Mogul Academy that where I broke down, the concept of the $10, $100, $1,000, and $10,000 per hour task. And people always talk about, my income is stuck at X, right? And it's a combination of, you can't put 100% of your effort into $10 tasks and expect to make a lot of money. And it's not reasonable to think that you can put 100% of your effort on $10,000 hour tasks and make that kind of money in a task situation. So there's a balance, right? And we looked at in this lesson the 80-20. Where is the 80% of your time spent, and where is the 20% of your time spent? And we look at, by shifting where your focus is across the $10,000, $100,000, and $10,000 hour task levels, how significantly your income goes up. But there's a next level beyond that with the things that we just talked about, because the task side is the doing component. Beyond doing, it's managing, communicating, and thinking. So there's a whole nother level of income potential when you can get beyond just understanding the task allocation and then into these other components and aspects. Now this is a conversation that is super fun to me, but I want us to get back to what can somebody go do today? Okay? So if they've self-assessed, they've picked their geography, they've selected their outcome, you guys said marketing. Build a list and send your marketing. What should people do? What kind of a list and what kind of marketing?
Well, I think it matches up with your geography and your outcome, right? So you have to, if you have answers to those questions, it kind of goes back to what you two were talking about is, I've picked a strategy, but I did it in the wrong market, and then Now I have a list and the marketing strategy, but I go and push it into a market where that distress may not even be.
Yeah.
Right. So I think that's why we've spent a whole good portion of this talking about steps 2 and 3, because now you should know a little bit more about your market and the type of list that you should be building, because you kind of already understand what types of houses and the homeowners that could be there. So if we're talking,
and let me stop you there, because let's say somebody doesn't know that. They don't know the answer to that question, right? They've heard us talk about Birmingham, and they're like, oh, Birmingham must be a good, easy profit city. So they say Birmingham. Okay, what would the next process and for me, I would go into FreedomSoft. I would go under tools, and I would go to Zip Finder. The first thing I would do if I picked my geography, I would go to Zip Finder. I would put in Birmingham, and I would let Zip Finder map Birmingham for me and tell me where the money is being made. Because what Zip Finder does is it shows you the hottest investor pockets in any city in the country. You go in, you pick the greater Birmingham MSA geography, and let Zip Finder map it for you. And what you'll see on that map is where investors are making money. So then what you get to do is you get to click on that top zip code, right? It breaks it all out, maps it by zip code. You pick that zip code. You build a list inside of FreedomSoft, either a seller list or a buyer list, and then you go in and you look, you use the property snapshots in FreedomSoft to say, okay, how are people making money here? Does this match my selected outcome? Are they making money flipping properties, buying, renovating, and reselling? Are they making money buying and holding? You can figure all of that out by using Zip Finder. And once you've then identified the area inside of your geography, your target, your top 3 to 5 zip codes, you go back to the tools, you go into FreedomSoft's Lead Finder, and you go build your custom lists.
Yep.
That's how I would approach it.
Yeah, I think with that data, you've proven what the most successful top portfolio owners and flippers are doing in that market.
That's right.
You've also proved that it's happening there, and it would be very obvious if it wasn't, because you would not see a lot of investor-style purchases per zip code, or you would see a massive drop between the top zip code and then just nothing, right? So if you can prove that, also with that data, when you've built that list, you can actually then go one step further, which you didn't mention, is looking at the exact houses that they purchased.
That's right.
What they purchased it for and what they potentially sold it on the back end. And if they didn't, run a rental comps to see, you know, you're doing your version of reverse engineering the numbers to figure out what you, the wholesaler or the purchaser yourself, need to be getting these houses for. And then Lead Finder, like you said, comes in and you're asking yourself, I know what I need to go look for. What lists have the highest probability or a chance to, you know, hold that type of that asset in there?
Yeah, because a lot of times what people do is they say, okay, Birmingham, that's my selected geography. So they'll go into Birmingham and they'll pick all zip codes in Birmingham, right? They'll pick all, 3, 5, 7 counties of the greater Birmingham area. They'll build a list, and it will be a mutt, right? It'll be very generic. It'll be broad. It will have high-end houses, median houses, low-end houses. It'll be so broad that they then just pick 1,000 records and say, well, that's what I can afford to send for my mail today. What we're telling people to do is stop before you get to there. Be very specific. Let's get targeted on those pockets of opportunity inside of a market. Let's get super focused on the not only greater Birmingham geography, but the pockets of geography inside that area. And let's spend all of our dollars and cents focused on those spots. That's what we try to teach people to do, and what we model people to do, and what we show people to do. They spend less money on marketing, they get deals faster, and those deals get across the finish line for higher profit margins. And so it all comes back to then this marketing. And so we've talked about inside of FreedomSoft using Zip Finder, Lead Finder. Now with Lead Finder, you can build preset lists. So we have predetermined filters on lists, or you can customize your list, right? You can build whatever custom list you want using the advanced filters. What would you guys do? We're all the way to this place of building our list, and we're about to drop marketing. What would you guys do? What list would you pick?
Well, you saw my 2 new ones yesterday on the live call. I actually spent Sunday night starting my new plan going into December and January for marketing, and it's exactly what we're talking about. Now, granted, because I've been in my market for a year or so now, I know the zip codes.
Yep.
And now I'll run Zip Finder to see if something slightly changes, and the pocket may change or a new pocket may pop up, right?
Yep.
To prove with data. But for me, I know that investors in the hot zip codes are doing 2 things. They are either flipping in a retail neighborhood where there are end buyers wanting to live there, and when there's also a rehab, they are doing the Burr method. So they're refinancing and getting their cash out, and then and then turning it into a rental, right? So they're doing that, and then the flip side is they're also buying rent-ready, turnkey, ready-to-go rentals with a tenant in place or needs 5 to less money to get it rented again, basically. That's what I've found is the sweet spot for me where I've seen investors buying. So the list.
Hold on a second. You just said needs 5 to less money. I don't know what that meant.
I meant 5,000 or less
5,000
in
or less,
rehab.
yeah.
In rehab.
$5,000 or less in rehab.
Yeah.
Okay.
Basically turnkey, just needs a little bit of a
Yep.
of a tenant flip, rehab. That was terrible wording. Sorry.
I was like,
Now that you mentioned
we've
it,
been
that
going
was-
for an hour, and his brain is just losing it. I have no idea what he's
So,
talking about anymore.
Rob, the key is 5 or less.
Yeah.
That's the key to the whole thing here.
So where I know those exist are 2 lists, and the first list is our vacant list. From there, I use the cookie cutter. It's a picture. It looks like a diamond, and it says vacant property. There's nothing crazy about it. Now, you could click into advanced filters, and this is where I find people saying, okay, it's vacant, but what else do I need to let because you talk about it, your brain starts to kick in, and then you're going to turn off this, you're going to turn off this, and then now your 800 vacant houses just turned into 90 because you stacked on only individual, you turned off LLC, and you said, I only want to deal with out of state, not in state. It needs to be high equity, but for the vacant side of things, I honestly just leave it as is.
Yep.
Build it.
Yep.
There's my results in my hot zip codes because you've already did the research and the pocket data.
Yep.
Because you're already in the right zip codes.
Well, what's fun and interesting about that is you can, inside of FreedomSoft, just pick the standard list, right? Just the standard vacant houses list. Then you could, and you can build that list. And let's just say for easy math, that's 1,000 properties, okay? Then you could go into the advanced filters and you could say, well, filter this down and show me vacant, but show me only absentee, show me only out-of-state owners, show me only owners that have owned it for 5 years or greater, show me only, and you can stack on layers of either things that would add to motivation or would increase your chances of them accepting an offer at a discounted price because there's equity, right? So let me just finish the thought here. So you can do this, and then the next piece is you've built your list. So you've got your standard vacant list. What we always tell people to do is to drop that list into a mail sequence into FreedomSoft's Mail Now system and let that sequence run. We have pre-built inside of FreedomSoft direct mail follow-up sequences. All you do is select your list, add it to a sequence, launch the sequence, and it's done, right? The other piece then you could take, and we oftentimes tell people to drop those into 4x6 postcards. They're inexpensive, they drop quickly, and they get a decent response rate, especially if you use proven marketing messaging like we do on our sequences. You could take that filtered down list that was 1,000 and down to, say, your 90, and you could say, okay, these 90 have additional motivations or additional filters applied, and I'm going to drop them into the postcard sequence because it's cheap, but I also want to send them a letter.
Mm-hmm.
So you could take the smaller filtered down list and drop them into a letter sequence.
Yeah, I'm glad you just said it like that, because what a lot of people do on the lead finder, the list builder side, they go ahead and break it down from there, and then they download that small filter down list. I actually do the opposite. I just take the whole list, because you got to think about it like this. If I could filter on the front end, I can still filter it on the back end.
That's
right. So on the back end, you have your overall picture of the vacants. But then from there, if I wanted to throw in an additional filter, I could just run an advanced search on that list and say, okay, of all these, like you said, let's start stacking on to prioritize maybe.
Yep.
And this is where some people may say, I'm coming in with an X amount of budget.
Yep.
So let's focus on the most stacked, higher motivation people. But you still built the whole list in total.
Yep.
From there.
Yep.
And then on the flip side, I do a tired, high equity-ish landlord absentee owner list. So depending on your market, that could be much, much higher than the vacants, or it could be lower than the vacants.
Yep.
This is always interesting depending on the market that you picked. For me, for example, it's double the amount of vacants, which tells me that there's a lot of buy and hold investors in these pockets. So that's what I focused on in the latter half of 2023. Now, tired in Freedom Soft is just a length of ownership or longer, basically, and it's not vacant. Someone else is living in it, just not the owner.
Yep. Love it. So, guys, I think we're about time to wrap this thing up, but I want to just summarize. Self-assess, pick your geography, select your outcome, build your list, and launch your marketing. That's the process. And the all of the understanding of what those 5 things are is the discussion that we've just had surrounding all of it. But if you're sitting here saying, it's December, I'm staring down the first of the year, and I want to change some things. Right now is the time to start building your pipeline, getting these things going, doing things in this way. And that is the key. And so,
can I throw a blanket step on all 5 of those?
For sure.
Do it in proximity to motivated people.
Yeah.
Don't
so
each one of those steps. Don't go at it alone, right?
Yeah. So if you're sitting there listening to this and saying, I like it, this makes sense, I want to do this, I want these results, just like we get, just like our students get. If you want to jump into and become a part of our community and be in proximity to people that are talking about this, thinking about this, demonstrating this every single day inside of our community, get involved. Let us know. Get involved in our community. You can go to fastermogul.com. Go to fastermogul.com and jump in. That will expose you to what we've got going on with the Real Estate Mogul Academy and how you can get involved with us. And we'd love to have you. So I think with all that being said, we'll continue this. Okay, now that we've got our list and our marketing, what happens next? We'll continue this in the next show. So we'll talk about it, and we'll continue to break down the steps in the process all the way to that closed, successful deal. So from here, friends, do us a favor. Subscribe on your favorite podcast player. Subscribe on YouTube, and like this video and share it around. Let people know that this is the conversation that's happening over here with the Real Estate Mogul Show. For myself and the crew in the studio today, thanks for being here. We'll see you in the next one. Cheers.
See ya. Peace.